Dear listeners, good morning. Welcome to DelfinGroup Investor Webinar. Today, our hosts are the CEO of DelfinGroup, Didis Admītiņš, and member of the management board and CFO of the company, Aldis Umblejs, who will walk us through the recently announced financial results of 12 months 2022. During the presentation, you are encouraged to ask your questions to the company by typing them in the Q&A window. We will cover them in the second part of the call. Now, without further ado, let me hand over to Didis and Aldis.
Thank you, Vieva. Hello, dear participants, shareholders and investors for joining DelfinGroup webinar. I'm Didis Admītiņš, CEO of DelfinGroup, and today with me here is Aldis Umblejs, CFO of the company, and we will present you DelfinGroup unaudited 12-month results. So next slide, please. I will present you highlights of the company, and Aldis will present financial and business data. And at the end, we will be happy to answer your questions. So how was the last year? I can say it was quite good, and despite difficulties, which is in geopolitics and energy crisis, we managed to increase our profitability. And But to start, we added one more year to our profitable operations, and altogether it's now 13 years we are working with profit, and since very beginning, since 2010, and the company is only founded in 2009, so it's quite an achievement. The year was quite good in terms of loan issuance, in terms of credit portfolio, in terms of revenue, and also in terms of profitability. But the main reason for shareholders in terms of dividends. So next slide, please. So about our key results, talking about loan issuance levels, at the beginning of 2022, there was still COVID-19 restrictions in first quarter, and but they are lifted from 1st April last year, and since then we managed to significantly increase our loan issuance levels, and altogether we managed to grow in terms of issuance for consumer loans to 64%, and in terms of pawn loans for 55%. So I counted it a very good result. So, and how we managed to work as such results to achieve them. So we worked very actively with our passive and active client base, and we work very active also with all our channels, with our wide branch network, with online channels, with our mobile app, and also with our partners, which is brokers and affiliates. And also we worked very actively with underwriting, with data analysis, to better understand in such times our client sentiment and how they will pay back the loans. So in terms of credit portfolio, we also managed to significantly increase our credit portfolio, and credit portfolio at the end of last year was 67 million euros, which exceeded our guidance. And if we talk about revenue, of course, larger issuance levels means a larger credit portfolio, and that means greater revenue unless credit portfolio is well managed, and it is in our case. And as you see in our profitability, we managed to increase profitability in 2022 for 40%. So I count it as a very good year. So next slide, please. So to continue with our business segments, first of all about online store, which I want to point out that is one of our strategic focus for for 2023, and also it was for 2022. Especially our strategic focus is on buying those items from our clients. That mean business to customer segment. I want to just say that we have those three main sources how we get those items. We get them from pawn loan segment when clients didn't fulfill their obligations. Then we sold the collateral. And also this growing segment for us is when we buy those items directly from our customers. And then there is segment when we buy those like business to business activities, when we buy those items, for example, from internet shops. And this is our strategic focus, and I see that we can add real value to that, because we have very good competence how we can evaluate those items. If needed, we can repair them. And also we add the value through that every item which we sell, we also add guarantee. So it's kind of similar how to when clients buy those items new. The experience is quite similar. So next slide, please. Especially since last year, since 2022, our strategic focus also is on innovations, and we are focusing on innovations which add value to our business, actually for all our business segments. And we set a special focus for digitalization, UX improvements, customer experience improvements, and also on product upgrades. And we have strategic focuses on every of our business segments, which is consumer loans, pawn loans, and retail. And next slide, please. Yes, and about talking about our stock, I want to mention that on October last year, we have this stock offering program, and through that we managed to increase our free float up to more than 50%, and in terms of market capitalizations, more than 10 million euro, and that was a requirement from Nasdaq Riga to be on the main list on a stock exchange. So next slide, please. Yes, and continue about our stock. I want to talk about dividend distribution. So, and talking about how our stock is performing, I can say that we are. I can say that we are like a dividend story, but that's not the all. We also are stock which is growing, and our business segment is growing, and dividend yield is somehow showing how we are performing, because we are, according to our dividend policy, we are distributing dividends 4 times a year, and last year our dividend yield stood at 8.1%, and which is quite good, and we don't see very often such kind of dividend yields in Baltics or in Europe. And also, I want to mention that compared to Baltic market, also our stock price was quite stable. And if we see that other stocks decreased, then our stock in last year increased in the share price. So next slide, please. And also talking about stock price and how others see us, in our web page, we have this analyst coverage from LHV Bank and also from Enlight Research, and they see that our stock price is on base level is evaluated about 180 to 2 euro per stock, and at the end of year our stock price was about 150. So we see that it's a bit undervalued, but of course I understand last year the environment was quite difficult. because all of energy crisis, ongoing war, and I understand that investor sentiment was not so good. But also one very happy thing what happened is that Investor Club's initiative, Investor Andris, invested in our stock. I guess it was this year. Investor Andris is like linked to Estonian Aripaev and let's say relative to Investor Thomas in Estonia, and we are quite happy that he invested in our stock. And we will be happy to distribute also dividend to Investor Andris. So next slide, please. Yes, and even before COVID, we launched our stock exchange, stock option program, and at the end of last year, first employees received their stock options, and they can exercise them this year. And I think very good thing about that is that many of our employees that will be the first stock, and they will join the capital markets, and I hope they will also invest in other Baltic stocks. And I think it's very good also I think in capital market development perspective. So next slide, please. Also talking about our social responsibility activities, like all previous years, we stayed active and in that field, and we invested, not invested, but donated for elderly people, also for children's hospital, and also, of course, last year because of ongoing war in Europe, we donated more than 250,000 euro to Ukraine, and also we will continue to do that also this year. Next slide, please. Yes, talking about our business activities, about retail, which is our strategic focus, I want to mention that this year we will open largest branch for Banknote, and I hope it's the largest bank not only in Latvia, but it's large. That will be the largest pawn shop in all the Baltics, and there will be a very convenient way for our customers to pawn or sell larger items, and it will be very comfortable because there is it's in a good location in Riga. It's in Imanta, which is one district in Riga. It's very good, well visible from street, and there is a good traffic, and the infrastructure is quite good. And also in this branch or shop, we will focus on retail. We will sell there all the range of things which we are selling in our web shop and in other branches. So it will be open in starting from second quarter of this year, and all the customers, shareholders are quite welcome to buy items, which we are selling in this pawn shop and branch. So next slide, please. And I will give a screen to Aldis, which will present results about our business performance and about our financial performance.
Yeah, thanks, Daisy. Then I will start with our largest segment, consumer loans. And as you can see, the consumer loan continues to grow also during the fourth quarter. And in total, 70 million new loans were issued in the last quarter, and the consumer net loan portfolio exceeded 60 million euros for the first time in company history, and grew by 55%. We are actively working on increasing the utilization rate of the credit limits assigned to our customers. as well as constantly improving the product offering. The non-performing loan ratio, although slightly increased in the last quarter, it was 1.4% at the year end. Nevertheless, it's far below the 3 to 5% target we have set for the ratio internally. And the low ratio, in my opinion, is evidence to our careful underwriting procedures and the usage of third-party collection companies for management of delayed loans. The age analysis of the consumer lending portfolio shows a healthy portfolio, as almost 90% of all our loans are not due yet. And by comparing the portfolio with the data at the end of the last year, we actually see a slight improvement of the portfolio quality as the share of the loans delayed has decreased. The pawn loan segment shows good results as well, and is growing for the already 7th consecutive quarter, and has surpassed the pre-pandemic levels. We see that the increase is driven both by the numbers of the transactions and as well as the average amount of the loans itself. To improve the customer experience, we are investing in digital solutions for the pawn loan segment, and aim to introduce a full online process for issuing the pawn loans during this year. Also, when looking at the redemption rates, we see that they continue to be stable, not indicating any deterioration of the pawn loan portfolio. The retail sales for the last quarter of 2022 were solid and just slightly missed the high of the third quarter. In overall, the increase in sales for the second half of the year were driven by new investments in the internet shop, as already mentioned by Didzis, as well as by focused sales campaigns. The gross margin has slightly improved and was 42% at the last quarter, and we actually expect for the internet shop to play an even more important role in the sale of the pre-owned goods segment going further, as we see the number of the sales transactions increasing. To satisfy the demand, we have increased sourcing for the goods, and now almost half of the goods are sold that are acquired via business-to-business channels. This, together with other initiatives, has allowed us to increase the assortment of the goods in our shops, and now there are almost over 40,000 items listed on our internet shop. As for the items that we are selling, smartphones continue to be our largest product category, following by the jewelry. And actually, jewelry is one of the segments we see a great potential that we will expand going further, as this segment is growing by quarters. And here in this slide, you can see just some of the benefits that we have mentioned when buying pre-owned jewelry or goods from DelfinGroup. When you buy, for instance, jewelry from us, you can be sure that the items have been inspected, verified by qualified experts. In addition, each of the items has been polished and can be purchased at a price that is below the price it would cost if you would purchase that as a new item. Also, for the purchases made in our internet shop, we provide a 40 days return guarantee, as well as for certain items, we provide a warranty up to 24 months. When looking at the consolidated income statement, we can see that the sales, as mentioned, have grown by 48% on a quarter basis and 42% on a year-on-year basis. The gross profit reached 5.7 million euros for the quarter and 20.8 million for the full year. EBITDA has increased over 20% for both the quarter and year, and the profit for tax increased by 10% and was 1.9 million for the last quarter, and for the full year it decreased by I would say staggering 40%, and it was 7.3 million euros. For the consolidated balance sheet, the total assets have grown by 48% and were 77 million euros, and out of that 87% comprises the net loan portfolio. On the liability side, we see an increase in the interest-bearing debt that comprises of bonds and maintenance financing, and the increase in this position supports our portfolio increase. When considering financial ratios, we can see that they highlight the good business development DelfinGroup has delivered. The cost-to-income ratio is decreasing, indicating an effective cost management from our side. Our interest rate coverage is healthy and 2 times above the amount required by our bond covenants. Given the uncertainty in the capital markets and the rising interest rates by central banks, our cost of funding has increased as well. Nevertheless, during the last quarter, the increase of the average rate was at a slower pace compared to the previous quarters, indicating a gradual slowdown. Our capital structure provides that we use a blend of both internal and external source of funds. For the external capital, we use Mintos peer-to-peer platform and bonds. Currently, we have 3 bonds outstanding, out of which 1 is open for subscription. All the latest bond issues have been arranged in cooperation with our partner Signet Bank via private placement, and one of our current bonds is listed on the Nasdaq First North alternative market. When we look at the revenue diversification, we see that although 66% of sales are generated by the consumer loan segment, the retail of pre-owned goods and pawn loans segments are picking up, and such diversification in the revenues allows us to better navigate turbulent times and also be profitable in, I would say, basically every economical cycle. Yesterday, we published our updated financial targets for the period 23-25, and they provide that DelfinGroup will continue its ambitious growth and aims to increase the net loan portfolio up to 100 million by end of 25, and in addition, it is expected to double the profit by end of that. By doing so, we will also continue regular dividend distributions to shareholders and aim for the dividend payout ratio to be at least 50%, as we have delivered also previously. And shortly about dividends, as Didzis already mentioned, we made already 6 dividend payments last year, 4 quarterly dividends and 2 payments for annual dividends. And altogether, we distributed almost 6 million euros to our shareholders. As well, given the publication of the unaudited results for the 4th quarter, the management is proposing to distribute additional 839,000 euro dividends for the 4th quarter, and this is up to shareholders' approval in the next shareholders meeting. And taking this all into account, the dividend yield based on the share price that was at the year end would have been 8.1%. And also a little bit about the share performance. When looking back and at the 2022, then the performance of DelfinGroup share was positive, an increase in 5.86%, while then Nasdaq Baltic Benchmark Index declined by 11.75%. As such, DelfinGroup was one of the few companies in the last year that delivered a positive return. And this would conclude our presentation, and now we could move on to the questions and answers session.
Very well, thank you for the presentation. Let's continue with the Q&A. Everyone is welcome to join the discussion by typing your question in the Q&A box that you see beneath the presentation. We will start with the previously submitted questions, and the first one goes the following. What will be the greatest challenges looking ahead? What is the current market share in Latvia, and what do you forecast in the future?
Thank you. I will cover this one. Of course, if we talk about challenges, of course, there is still geopolitical crisis, and there is still inflation, and we see some from risk perspective. Of course, there is financing risk, but I could say that we are managing that quite well. And also talking from challenge perspective, we can talk about the payment discipline of clients, but we are also managing that quite well. You all see our non-performing loan levels. And if we talk about our market share and how it could develop, from in latest data, which is from end of first half of 2022, we see that in consumer loan, non-bank consumer loan market, our market share is 13.3%, and it is growing every single year. For example, in 2018, our market share was only 5%, less than 5%. Now it's more than 13%, and we are seeing that it's growing, and I see that it will continue to grow. And if we talk about pawn loan market share, then our market share there is about 52%, and it is also growing. So we will grow in terms of market share in both our credit segments.
Thank you. When the company plans to achieve positive free cash flow stream?
Yes, I will cover that. Actually, the lending operations that are our main bread and butter are cash intensive, and in the cases when company lends out more than it receives back from the borrowers, then cash flow is negative. And in our situation, the cash flow would become positive only in the case when the lending amounts would decrease and inflows are larger as outflows. And since we see a strong demand for the products in 2022 and in the years coming, and also given our projections for the years 23-25, in order to satisfy the demand and grow the portfolio, we'll need to continue funding loans, and our cash flow will be negative. So in our case, to achieve a positive one would mean back to scale back our operations, and I don't see that in the foreseeable future.
Thank you. Then there is a question about your borrowings through the Mintos platform. How do you see the situation with interest rate changes in 2023? Will they increase or decrease?
About the interest rates, the overall interest rate market, as we see, it's upward going, but I think in overall it will reach a peak or has reached a peak more or less, and will flatten out. As for the rates in Mintos platform, as you know, this is a marketplace, and the rates are determined there based on supply and demand principles, and to forecast if they will go up and or down, I can't comment on that, and basically it will depend on if there will be sufficient, let's say, investor that will drive the demand, and therefore the prices go, the rates go down, or otherwise if there are let's say lower amount of investors and the prices the rates stay as they are.
The participants are also inquiring about the potential public offering of DelfinGroup shares in future. Would there be one?
Mm-hmm. Yeah, we had our initial public offering year and a half back, and last year there was another one where the larger shareholders sold part of their shares, and actually right now we don't see let's say in the near future any other public offering, but again situations might change, and if something that's in that respect comes up, we will definitely let know.
What will be your strategy for the next 5 years?
Okay, thank you. I will cover this one. Yes, talking about our strategy. First of all, I want to point out that our main target is to increase value of the company. That's our main strategic objective, and all our activities support that. And also our strategic focus is on being like first choice for consumer loan and pawn loan crediting segments in Latvia. That's our like strategic focus on that, and also our strategic focus is on being ambassadors of circular economy in Latvia. And that's also, we have very strong focus and on retail of buying and selling pre-owned goods, and how we will achieve that. That is by innovation in and investments in our products, and investments in that how we serve our customers. So basically that is very shortly about our strategy, and so that's the answer.
Thank you. Let's now turn to the questions submitted during our online session. The first one, question regarding the credit loss expense in fourth quarter 2022. This seems to have gone a bit off. Have you got it back in line in first quarter this year?
Okay, I will try to answer on that. Actually, when looking at the credit loss expenses, I cannot say that they went off as they are reasonable. The reason for the increase in credit loss expenses is due to increase in the portfolio, as by applying IFRS you have to recognize credit loss expenses at day one when you in fact issue loans, and I would say that the increase is due to the application of IFRS principles and the loan portfolio. And when you look at, let's say, the quality of the portfolio and the non-performing loan ratio, we don't see any, let's say, deterioration in the portfolio, and it's more of an accounting issue rather than actual potential problems of a loan portfolio.
Thank you. In the middle of all the questions, we also have one positive feedback, a compliment regarding the great presentation and good investor relations work. The next question that we have received, there was announcement of the next shareholders meeting, which included an agenda point of changes in the dividend policy. Will it affect the amount of future dividends?
Yeah, I will answer on that. No, the changes proposed to the dividend policy are rather technical, and they in fact benefit the shareholders, as the current wording would limit us in the time frame when we can distribute the annual dividends, whereas the proposed changes would allow us to make annual dividend payments also later in the year, if there would be, let's say, a favorable situation for that.
Thank you. Would it not make sense to expand pawn loans into neighboring countries?
Okay, thank you. Yes, very good question. I think it makes sense to expand business not only to neighboring countries, but the countries where this market segments where we are working is active, where there is a demand for such service. And of course, we are looking around, we are actively thinking about how to develop our business and how to work in the future. And of course, the stock exchange will be the first place where we will inform about our plans. But at the moment, there are not exact plans about that.
Thank you. During the previous investor call, you noted that you aim for equity ratio around 27%, whereas now you guide for equity ratio in the 20% area. What's the story behind that? Wouldn't it be more reasonable to conserve capital currently instead of implementing aggressive dividend payout? And an additional question, are there any plans to increase your buffer to bonds capitalization covenant?
Regarding this question, first I would like to know that our intention is to have the equity ratio above 20%. The guidance says that it's 20% the minimum, but it will be above, and just for convenience, it's not specified there, let's say 22 or 23%, because it might change. So we left it at the 20, but it will be higher. And why it is lower? First is it's because of the growth of the business, of the growth of the balance sheet, because obviously by growing the balance sheet, the equity ratio decreases. And also we see that the need for such a high equity, maybe it's not optimal for the company, because when seeing how to best utilize, let's say, capital and in form of shareholders' equity and borrowing, we might consider that 27% is rather high. And in regards to the dividend distribution, I wouldn't say that we have a aggressive dividend policy. Let's say we have in our opinion, let's say, a normal dividend policy that is according to the policy of distributing of 50% of dividend of the profits to the shareholders as dividends, and we plan to stick to this target also going further as explained in the previous slides. And as for the plans to increase buffer to bond capitalization covenants, we follow closely on our covenants constantly, and And just to have for the sake of larger buffer, we are not let's say aiming for that. We are doing, as said, to have a balanced utilization of both equity and borrowings.
Thank you. How will you ensure the growth published in the latest guidance?
Yeah, thank you. I will cover this one. Of course, that's the question is very linked to our strategy. Of course, we will continue to invest in our product. We will continue to invest in innovation. That means that the product will be with better user experience, and we can let's say scale our product, and through that we see that we can grow market share, and we will do that by better serving our customers, and actually also what I already mentioned about to be like ambassadors in circular economy market, circular economy field. We will expand our activities also in retail segment, not only in credit segments. So that will through that we will achieve the targets which is in our latest guidance.
Thank you. The 2024 portfolio growth targets are quite ambitious. While year-over-year growth in loan issuance is quite good, quarter-over-quarter growth is quite minor. Where and how do you see reaching target growth if bond loan market will remain stable and group's market share in consumer loan market has rather slight upside?
Okay, I can cover this, and maybe Aldis can add something. I think the question is about why maybe for last quarter of 2022 is not so good, not so large increase in loan issuance levels. That's a bit linked to that. At the end of last year, there was some exchanges in customer sentiment because of energy crisis. But if we look forward, we see that of course our target is quite ambitious, but also that how we manage our business is quite ambitious. And actually, I can say that we are quite confident about credit portfolio potential increase because we see this track record. We see that we increase our market share in terms of credit portfolio historically very good. And yes, we are quite confident that by investing in our product, investing in innovation, we can achieve them. I'm quite sure about that.
Why credit loss expense remained at the same level after one-off cessation deal? Shouldn't, at least in short term, credit loss be at lower levels? And where do you see Q1 credit loss level?
Okay, I will try to cover this. Don't know if I do it get right, but about why credit loss expense remained at the same level after one-off session. If that's relates to the income statement, then the credit loss, the sessions already include the credit loss expenses created in the previous periods, because when we write off the loan portfolio, when in case of the session, we offset the loss with the credit loss expense we have recognized in the previous periods, and that comes from the balance sheet, and it doesn't it isn't reflected in the income statement. And the second part shouldn't. Where do you see the credit loss levels at the Q1? I would say it's rather early because it's just the second month has ended, but let's say seeing the situation in January and also having some feelings of the February, I can say that we don't see any let's say deterioration in the overall borrowing market and the customer repayment, and in fact we see, let's say, a positive sentiment from the customer side, and that is also reflected in our credit provisioning.
Thank you. 2 more questions to go. Equity ratio is below 2022 target, and capitalization ratio is approaching covenant limits. How is this going to impact annual dividend distribution?
Yes, I think I covered a little bit the equity ratio previously, but how that is going to impact annual distributions, let's say, the annual dividend distribution, this issue will be reviewed by the management, and will be up to vote for the shareholders at the annual meeting after we have completed the audit of the annual statements, and clearly we will look that as a complex matter in considering, let's say, the further growth of the company, and also in fulfilling the dividend policy.
Thank you. And the last question, can you please comment on the default rates current year versus prior year, and remind the key drivers for tendencies in repayments in 2022?
Okay, thank you. If we can talk about default rates only for of course consumer loans, because for pawn loans default rates are not impact on our profitability, because in case of default we are selling the collateral. But if you talk about consumer loan, then about default rates, in the long run, it's like the default rates are increasing because of our data science team and how we are making underwriting for consumer loans, and also we have some positive legacy from COVID-19 times, because we in COVID-19 times, when there was that stress situations with customers didn't know what to do, how they will pay their loans, we have this possibility to make restructurizations for consumer loans if there is any problems, and we are using that. Also, we are using debt sales for non-performing loans, and but I can also say that actually customer like possibility to pay back their loans is actually very good, and the reason for that is that we have managed in the long run to very good understand our customer, and we know them very good, and our underwriting policy is quite quite good, and we can divide customers which can pay back loan and which can't, and we are crediting only those who can repay back. And the reason is that in the long run, and that means that in the long run the default rates are decreasing. And the one thing what you see in our non-performing ratio, that it's also at a very, very low level, And that's also the good thing for investors because in our balance sheet, there is no such non-performing loans, or they are at a very, very low level. That means that our credit portfolio is up to date and the clients are paying for their loans.
Thank you. All questions are now answered. The recording of the webinar will soon be available online. Therefore, as always, please follow DelfinGroup announcements to stay up to date. Thank you for joining the call today and have a nice day.
Thank you.
Thank you.